Dear Chartered Accountants, working professionals and students in the domains of Indian auditing, accounting and the tax and regulatory space, welcome to podcast of Fca Deepak Rao, a practicing Chartered Accountant. Daily news and updates for 10th August 2023. The Minister for State for Finance, Shri Pankaj Chaudhary, recently clarified various questions about the Goods and Service Tax network being brought under the Prevention of Money Laundering Act. The government brought GSTN under PMLA to strengthen the fight against money laundering and terror financing. The GSTN is a vast repository of information on all GST transactions in India. This information can be used by the Enforcement Directorate and other investigating agencies to track down and prosecute money launderers and terrorists. The Board of Council for Cricket in India, or BCCI, the apex governing body for cricket in the country, made a substantial contribution to the nation's finances during the 2021-22 fiscal year. This information was unveiled through a written response in the Rajya Sabha, where Minister of State for Finance, Pankaj Chaudhary, provided comprehensive insights into the financial activities of the BCCI. The details encompassed not only the income tax paid by the board but also shed light on its revenue and expenditures over the past 5 years, as disclosed through their filed returns. The gaming industry is experiencing significant challenges following the decision by the GST Council to impose a 28% tax on the full player deposit value in online money gaming. This move has led to the closure of gaming startup Quizzy and promoted other companies like MPL to make drastic changes to their operations, including cutting manpower. MPL, one of the leading players in the industry, has announced a decision to reduce its workforce by half in order to cope with the increased tax burden. This decision comes after Quizzy's shutdown, where the founders cited the GST decision as a major factor in their closure. Quizzy mentioned that the new tax rates would significantly increase their tax burden, making it unsustainable for them to continue operating. Currently, companies get a period of 6 days to list their shares after the public issue closes for subscription. While the reduced timeline will be introduced on a voluntary basis for public issues opening on or after September 1st, it will be mandatory for all issues opening on or after December 1st, 2023. This assumes significance both from a company and an investor point of view. A reduced timeline means that the investor money would be blocked for a shorter duration of time, while for a company, a curtailed timeline would mean lesser risks with respect to market volatility and fluctuations. An official committee under Corporate Affairs Secretary Manoj Govil has been set up to examine the need for any ex-ante regulatory mechanism for digital markets through a separate law and to study international best practices, among others. This committee is set to complete the initial drafting of its report this month. The Rajya Sabha on Wednesday passed the Digital Personal Data Protection Bill 2023 with a voice vote following a walkout by the opposition members over the Manipur issue. The Lok Sabha had passed the bill on August 7th. The bill, which comes after 6 years of the Supreme Court declaring right to privacy as a fundamental right, has provisions to curb the misuse of individuals' data by online platforms. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.